All right, everybody, I have another red pill for you here this week. This week, the Commitment to Traders strategy has revealed a whole bunch of different setups. Today, I'm going to talk to you about the cattle market and the live cattle market in particular. Just to be clear, this isn't an invitation to just blindly long this market. What this means is that the conditions underlying the marketplace that caused the market to go from point A to point B are suggesting we're getting close to a market top. And as always, we start with the Commitment to Traders commercial index with a 26-week look back. We see here that the commercials are at an extreme in short positioning relative to the last 26 weeks. That is our code number one to decoding this market. We also see that the small speculators are at a 3-year extreme in short positioning. Now, what is unique about this and why I really wanted to teach this today is that the meat markets operate a lot differently than the majority of the other markets. And what I mean by that is in most other markets, we want to fade the small speculators. And what I mean by that is we want to do the opposite of what the small speculators are doing when they get to extremes. But what we see with the meat markets is that a lot of times the small speculators actually get it right. Look at the last time the small speculators got this short. This is the green line here, their net open positions, their net open interest. Last time they got this short was prior to this massive multi-week down move. Now what we see is that the small speculators are at the most short they've been in the last 3 years. So that is another code in our basically process to decode this market and figure out the next major market move. Now, true seasonal is not in our favor. We see true seasonals to go up until February. Seasonals show you what happened in the past. Positioning shows you what's happening in the present with real people with real large sums of money. So I will ignore that seasonal if these extremes are present, which we see. We're not quite there in an extreme in advisor sentiment, but we're getting very close to an extreme advisor sentiment. Now, if we head on over here, we're going to take a look at valuation. We see that we're overvalued relative to the price of gold. That's this faint gold line here is above the measure for valuation, showing overvalued measure of the price of cattle to gold. And we see on the front month as well, the same reading here as well. Now I'm going to show you also the spread divergence. Now what I did here was I took the front month and I created a spread down here. I created a line chart and I took the front month minus the next month out. And that gives you this spread. If you want to know how I found those prices, you go to bar chart, go to futures, go into livestock or whatever market you're looking for. And then I found live cattle. I found the market with the most volume trade or open interest and volume traded. So I took LEG 25 minus LEJ 25 creates this spread chart. And what we see here is the spread is weakening. So price is making higher highs while the spread is weakening. The front month minus the next month out is showing that the demand for the front month is weakening. So we like to see that when we're also looking to go short this market. Now we also see some measures of distribution coming into the marketplace here. If I go over here, we'll see this is price, open interest, and volume, the green line. So we see price made a higher high. And what we want to see with this index is divergence. And we see POIV failed to make a higher high. So that is showing this market is being distributed. Another measure of accumulation and distribution is this index here. Again, diverging. The insider accumulation index is making a lower high, implying that we have some distribution coming into this marketplace. This is on the daily time frame. And then we also see price made a higher high here, while the ultimate oscillator is making a lower high. So we have those measures of distribution showing us this market is being distributed. If we come back here and go to the daily time frame on this chart and we open up this is the Williams Progo indicator. We see here, this is another way to measure distribution and accumulation. We see that basically price made a higher high while the Progo made a lower high. So we have distribution signals there. And to top it off and finish things off, going over here, we see that the %R is in a sell zone. Now, mind you, these signals work a lot better when they're with the trend, like you see here when the trend was up and the %R got into the buy zone and we took out this week's high. There's a beautiful buy signal, but it's still, considering the fact that the positioning and everything else decoding this market is telling us to go short. If there's a trend change, then on the daily, this is just nice supplementary indicator. We also see that bearish divergence is confirmed. So price made a higher high, while the momentum indicator, 28 period momentum, made a lower high, and then it confirmed when we got the close below this low on the oscillator. That means this divergence is confirmed. So there's a lot of reasons to go short this market if we get a confirmed trend change on the daily, and that is, to be clear, this is a setup telling us the conditions underlying the market are fundamentally there for a market reversal to the other direction. We need an entry trigger to get us into the market. So just remember, these setups don't say just go short live cattle. Now, just to talk about feeder cattle, it is also set up for short. So both feeder cattle and live cattle are set up for shorts. I just thought I would review one of them here. And this is how I decode the market. We're just looking for a combination of codes, like you're typing in a password into your computer. You need a combination of letters that gets you into your email, or you're making a recipe and you need a number of ingredients to make that perfect dish. Or when you got a lock, you got to twist it one way to one number, twist it back to the other number, and twist it back again to the next number to unlock the shackle. And that's all we're doing here. So if you found this video insightful, you can reach out to me. I am basically your guy if you're looking to learn how to trade with Commitment to Traders. I have lots of things that I can share with you. I'm sure I can add value. I have a Discord that if you'd like to join, just shoot me an email, tradiustrades@gmail.com, and at that place we can discuss the markets, and can help you sharpen your sword here and learn how to see underneath the hood of this market and see beneath the surface. It's not just price action basically that we're trading with. There's reasons that these markets move from here to here, and they're fundamental conditions in the marketplace. And realistically, once you know what to look for, it's not that hard to figure this stuff out. So hope you like this. I hope you guys have a great weekend, and I appreciate your time, and thanks again. Bye-bye.